Inflation is here to stay. I've said it before and I'll say it again. The idea that inflation of 5% over the last year is fine because it's transitory is utter nonsense. This inflation is caused by the crazy money printing that the US government and the Fed have been doing for over a year now, and it is not going to stop until the money printer is turned off. And I'm not the only person who thinks this. Far from it, in fact. Tudor Jones, one of the most successful hedge fund managers of all time, just went on CNBC and explained why he thinks that this inflation isn't transitory and why it's here to stay. I'll play that interview for you guys here in a second, but I'm really quickly going to ask you to hit that like button, subscribe to the channel. There are more videos just like this coming out every other day that you do not want to miss.
Well, I think this Fed meeting could be the most important Fed meeting in Jay Powell's career, certainly the most important Fed meeting of the past 4 or 5 years. And the reason why is because we've had so much incoming data that challenges both their mission and their model. So how they react to that will be extraordinarily important and will be signaling, I think, for investors as to how they should deal with their portfolios going forward. You have to remember that the Fed right now is really operating with a single mandate. Their stated goal is maximizing employment. And you can almost see how important that is to them and just the way that they view the difference between employment and inflation. With employment, they want to see outcomes. We want to see material gains in employment. With inflation, they tell you it's transitory. Trust our forecast. It's an intellectual incongruity that risks damaging their credibility if they're wrong on their forecast. So this meeting is really important because you've had a variety of data points that come in that, again, challenge both their mission and their model.
So do you believe that the inflation we're seeing, if it is inflation at all, is transitory? Do you believe that their credibility is at risk because their model is wrong?
Well, first of all, you have to, it's somewhat disingenuous to say that inflation is transitory, for them to say inflation is transitory, because if we look at the past episodes where inflation has been transitory, it was with reaction function to a Federal Reserve Board with a completely different mandate, right? They had a dual mandate. This Fed is focused primarily on maximizing employment. So how can you use historical antecedents to sit there and predict the future when you've got a different reaction function now than the Feds of the past have had? A great example of that would be, take 2013. 2013, when they first began to talk about taper, inflation was 1.5%, CPI was 1.5% versus 4.9 now. And at that time, you had 6.3 million people unemployed, more than there were job offers. So today, we have the same number of people unemployed, 9.3 million people, as we have job offers. They're exactly equal. So if we go back to 2013 and we look at both inflation, which is much greater today than it was then, and we look at the number of unemployed relative to the number of opportunities to be employed, you had a situation that's completely different than now. And yet that Fed in 2013 was concerned enough about inflation to begin to taper, which they ultimately did, obviously, the beginning of 2014. So when you say today that inflation is going to be transitory and you compare the taper to 2013, they're miles apart. They're miles apart. When you look at the Fed today and the Fed back then, you wonder, how can you have such wildly different policy views on what constitutes the right levels for employment, the right levels for inflation? How can you have that within an 8-year time frame? It's almost like a split personality, and you wonder why Bitcoin has a $2 trillion market cap and gold's at $1,865 an ounce. And the reason why is because you have this dichotomy in policy that, again, questions the institutional credibility of something.
So there you go. The Federal Reserve is ignoring the data that tells us that we're seeing too much inflation and is instead focusing entirely on maximising employment. Paul Tudor Jones is obviously sceptical when it comes to the Fed, and for good reason. Jerome Powell and the government are telling us to look at the facts, to look at the data and trust the science when it comes to employment, and that all that really matters is the employment figures, and if they go down, then things are okay. But as they tell us to trust the data on unemployment, they also tell us to ignore the data on inflation. They throw around this magic word, transitory, which is supposed to mean that the inflation won't last, but in reality, all that it really means is that they're just going to ignore it. The facts are there, the data is there. The United States is seeing record levels of inflation, but all that the Fed will do about it is say, trust our forecasts, it will be okay. But we know that the forecasts are wrong, and so do they. In April, the Fed said that inflation would be 0.6% for that month, but it was 30% higher than that at 0.8%. In May, they told us it would be 0.4%, but it was 40% higher than that at 0.6%. If the Fed gets their forecasts wrong time after time, why on earth would anyone trust them to be accurate in the future? In March, they told us that inflation for 2021 would be a measly 2.2%, pretty much on par with a normal developed economy. But we saw a third of that in 1 month. Last month, we found out that year-on-year inflation was already at 5%, more than double what they predicted. Now, literally just yesterday, they revised their forecast to say that inflation for the year of 2021 would be 3%, not 2%. Now that might not sound like a huge revision, but to have to increase your projections by 50% because the data proves you wrong is an absolute failure on behalf of the Fed. And I guarantee that their revised figures are going to be wrong as well. The Fed is staring us in the eyes and telling us that the sky is red and they expect us to believe them. And look, I understand if you're skeptical of what I have to say. I'm just some random guy on the internet, you don't know who I am. But that's why I'm using these interviews with these world-renowned investors, because I want you to know that the smartest people out there, the most successful people, the richest people in the world, they don't trust what the Fed is doing either. And this data is out there for everyone to see. You yourself can Google what the Fed forecasts have been for inflation and how much they've missed them by, because they've always missed them. You can Google the house price growth over the last year and question why that isn't included in our inflation figures. You can look up Paul Tudor Jones and see how he predicted Black Monday, the stock market crash in 1987, and see how he performed better than anyone else in the world during that crash. You can look into him and see what he has to say about this whole thing. In fact, I'll even link to the full 30-minute interview down below for any of you who want to hear more from him. Finally, I'm just going to ask you all to be careful, to look at the facts and the figures, and not blindly trust everything that the Fed or the government tells you to. If you made it this far, hit that like button, make sure to subscribe to the channel. I'm going to be putting out 5 more videos every week that you do not want to miss. Thanks for watching, until next time.